Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended mixed on region-specific developments, with the US equities falling as investor sentiment soured over escalating trade policy tensions and signs of economic weakness. Data released during the week showed new jobs data is disappointed, while unemployment rose to 4.1% in the US. Despite rebounding on Friday, the S&P 500 fell 3.1% for the week, marking its worst performance in September. Nasdaq Composite fell 3.5%, officially entering the correction territory, which marks a fall of over 10% from the peak. Asian equities rose during the week, led by China offshore, which gained over 6% on strong PMI data, and policymakers reiterating their supportive stance through a more detailed fiscal and monetary policy measures at the annual meeting. Other markets like Indonesia, Philippines rose about 6 to 7%, Hong Kong rallied 5%, while Taiwan, Malaysia and Thailand lagged, falling 2 to 3%. Back home, Indian equities gained after 3 consecutive weeks of sell-off. The Nifty index rose over 2%, driven by strong domestic buying and positive domestic growth data. Broader markets outperformed the Nifty index this week, with the Nifty index up 3%, while the small cap index recorded a gain of 5% for the week. Among sectors, metals and energy led the gains with over 6% and 9% gains respectively, while banks and financials closed flat for the week. The Indian fixed income market had a stable week, with Indian government bond yield curve steepening as yields at the shorter end declined, driven by the RBI announcing further liquidity boosting measures, which included an FX buy-sell swap for USD 10 billion, along with an INR 1 trillion worth of open market operations, which included buying bonds, ahead of the seasonally tight fiscal quarter end. The 10-year Indian government bond yield remained broadly unchanged at 6.75%, while the 3-year and 5-year government bond yields fell around 2 to 3 basis points. Brent crude oil rose on Friday after President Trump threatened sanctions on Russia following a ceasefire agreement. However, it recorded a weekly decline, falling around 3% to $70 per barrel amid news of OPEC and allies likely to continue with their planned output increases in the month of April. The INR rose 0.4% against the US dollar to close at 87.1 per dollar. A sharp decline in the US dollar and falling crude oil prices negated the impact of foreign investor outflows and higher US bond yields. Coming to macro updates for the week, the first was on India's manufacturing PMI, which eased to 56.3 in the month of February 2025, below January's 57.7. Output and new orders remain elevated, driven by robust domestic and international demand. Input purchases expanded, though at a 14-month low as firms rebuilt inventories and mitigated potential shortages. On prices, input cost inflation eased for the third consecutive month to a 1-year low, while charge inflation stayed above the long-run average as firms passed on higher costs. Finally, business confidence remained strong, with nearly a third of respondents expecting higher output in the year ahead. The second update was on India's services PMI, which rose to 59 in February 2025 from January's 26-month low of 56.5 and market consensus forecast of 57.3. This reading marks the 43rd consecutive month of growth in services activity, boosted by improving domestic and international demand. New orders grew faster, with external sales rising the most in 6 months. Employment advanced sharply while backlogs of work increased. On the price front, input price inflation eased to a 4-month low, while output cost inflation remained broadly similar to January, staying above its long-term average. Finally, business sentiment though weakened to a 6-month low. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.